Okay, let's get right into it. Something just happened that honestly might not look like a big deal at first glance, but trust me, it could be the moment that completely rewrites the rulebook for crypto in Europe. We're talking about a super small investment that's already making some massive waves.
So here's the headline that's got everyone talking. A government using its own state funds just bought Bitcoin. I mean, let that sink in for a second. This is the kind of thing crypto folks have been dreaming about for years, and it's not a rumor, it actually just happened.
But here's the real kicker. How much did they invest? About $7 million bucks. Now let's be real. In the world of giant government funds that play with billions, $7 million is, well, it's basically pocket change. It's a drop in the bucket. And that leads to the big question, right? If the number is so tiny, why is everybody, from Wall Street analysts to crypto Twitter, calling this a historic moment? How on earth can $7 million be a game changer for global finance? Well, that's exactly what we're about to break down. It all boils down to one simple idea. You have to forget about the price tag. The message here is so much bigger than the actual amount of money. We need to look past the $7 million and really unpack what Luxembourg just did, because it sets a huge precedent. And this is where it gets really, really interesting. The investment? Yeah, it's just 1% of their fund, tiny. But the precedent? That's massive. Think about it. Before this, no sovereign wealth fund in the entire Eurozone had ever officially bought Bitcoin. Ever. Luxembourg just broke the seal.
And you know, this wasn't some intern making a rogue trade. This was a very deliberate move. A top official came right out and said it shows their measured confidence in the market. They're basically telling the world, hey, we see this stuff as a real maturing asset class now.
What this all creates is something called institutional legitimacy. For so long, Bitcoin was seen as this weird, risky thing on the fringes. But when a government fund, a really established player, puts it on their balance sheet, wow, that sends a powerful signal to everyone else. It says this is not a toy anymore. This is a serious asset. It's the ultimate stamp of approval.
So you might be wondering, how did a super conservative government fund get comfortable enough to dip its toes into the wild world of crypto? They didn't just dive in blind. They used what you could call the safe Bitcoin formula. And honestly, this might be the most important part of the entire story. They created a simple 4-step blueprint that anyone else can now copy. First, and this is key, they didn't buy the Bitcoin themselves. Instead, they bought shares in a regulated Bitcoin ETF. This one move gets rid of all the scary parts for big institutions, like worrying about private keys and hacks. It just makes it easy. And see, that's the secret sauce of these ETFs. For a big fund, they're perfect. They trade on the same old stock exchanges they've used for decades. They're watched over by financial regulators. And most importantly, it gives a huge nod of approval to the infrastructure that giants like BlackRock and Fidelity have built. It's the perfect on-ramp from traditional finance to the future. So, if Luxembourg just laid out the perfect roadmap, what now? Is this the first domino to fall? Are we about to see a whole chain of European institutions follow suit? To figure that out, we've got to zoom out a little bit. The thing is, this move by Luxembourg didn't happen in a vacuum. The ground is already fertile all across Europe. You've got Switzerland becoming a huge hub for crypto banking. You've got German asset managers jumping in. France is licensing firms. Liechtenstein is way ahead with regulations. Luxembourg's move is just the next logical step in this massive regional shift. And hey, if you want a little sneak peek of what could happen when these institutional floodgates really open up in Europe, we don't even have to guess. We just need to look across the ocean. Just look at these numbers. This is from a single day of trading for the US Bitcoin ETFs. BlackRock's funds just by itself pulled in over $426 million. That's more than 60 times what Luxembourg invested in total in one day. It just goes to show you the insane level of demand that's sitting there, waiting. And if we zoom out to the whole world, it's even more staggering. We're talking about more than 168 times billion dollars that have already flowed into these kinds of crypto funds. That means these regulated products now hold almost 7% of all the Bitcoin in existence. This is not a niche little market anymore, not by a long shot. Which brings us right back to where we started. That $7 million from Luxembourg, it's not going to move the price of Bitcoin one bit, but the signal, the signal is everything. It's like it gives political and financial permission for every other big fund in Europe to turn around and ask, well, if they can do it, why can't we?
So we're left with this one big question. We just saw a government take a tiny, calculated risk using a safe, easy, regulated path. It feels like a small step for sure, but it could very well be the beginning of a giant leap. And the only question left is, who's going to be next? Is this the day we'll look back on and say, that's when Europe's crypto story really started to change?